Hi everyone, welcome back to Corporate Decoder. Today we're diving into Envirotech Vehicles' latest annual report, a document that promises insights into the company's journey in the electric vehicle world. I'm already sensing a bumpy ride ahead, kind of like trying to drive an EV with a dead battery. Let's plug in and see what's really going on. This report covers their activities until the end of last year. Envirotech makes electric vehicles aiming to cut down on pollution and offer cheaper transportation for things like delivery services and school districts. Envirotech basically gets vehicles made by other companies, mainly in China and some Southeast Asian countries, and then sells warranties and services them here. They're trying to build a network to handle all that. The report does talk about emission standards and regulations. California, for example, had rules pushing for more electric trucks, but the report notes those rules have an uncertain future with potential changes in government policies. There is mention of an executive order that may have direct implications on the policies and regulations that impact the automotive and transportation industries. This executive order seeks to rescind waivers granted by the EPA for California's zero-emission vehicle regulations and modify and/or eliminate the greenhouse gas standards for trucks. The status of US and state emission regulations discussed above remain uncertain. It sounds like Envirotech acknowledges that less environmental restrictions and incentives from the government, the harder is going to be to sell electric vehicles. The company had plans to sell to vehicle service providers, businesses that contract with major retailers. But this approach hasn't been as quick to generate sales as expected. It seems their focus is shifting to building their own sales team and setting up dealerships in states with big incentives. Also, they're trying to have their vehicles approved for state incentive programs, especially in California, to make them more affordable for businesses. It is worth noting that the Houston location will also house R&D, engineering and sales efforts, as well as production and logistics functions for the recent Maddox acquisition. Now let's get into the part everyone actually cares about, the numbers. They had a backlog of 2 zero-emission Class 4 trucks and 42 zero-emission Class 4 cargo vans at the end of 2024. Alright, let's talk government help. Envirotech emphasizes that the availability of government subsidies and incentives is an important factor considered by customers when purchasing vehicles that utilize our technology, and that our growth depends in part on the availability and amounts of these subsidies and incentives. With changes in federal and state governments, the status of this funding and several other related programs remains uncertain, so changes may have a material and adverse effect on the implementation and continued existence of key electric vehicle support programs. The report then mentions several incentive programs, including the Clean Truck and Bus Voucher Incentive Project known as HVIP and the New York Truck Voucher Incentive Program NYTVIP, among others. Time to brace ourselves because now we're heading into the risk factors. This is where Envirotech lays out all the things that could go wrong, and there's quite a list to consider. First, they highlight the big one, needing people to actually want to buy their electric vehicles. If they can't create demand, they can't generate revenue. And like every other car maker that's trying to make electric happen, Envirotech is dependent on external sources for the financing of our operations. This means they need to keep finding investors. They also emphasize their ability and their manufacturing partners' ability to navigate the current disruption to the global supply chain and procure the raw materials, parts and components necessary to produce our vehicles on terms acceptable to us and our customers. And like any tech company, if they aren't unable to respond and adapt to changes in electric vehicle technology, the company could be in trouble. That's a point they reiterate, mentioning how the availability and amounts of government subsidies and incentives and the application of regulations that encourage conversion to EVs are critical to their future. But this could quickly turn sour. Okay, let's quickly run through the financials. Looking at the balance sheet, their cash and cash equivalents are close to 2 million, which is better than last year. They are receiving more payment from related parties. It now approaches 1 million, while last year there wasn't such a number. This could mean that related parties are not able to pay on time, so they might be depending on those loans to stay afloat. But keep in mind that assets do not tell all of the story. Looking at liabilities, their accounts payable is higher this year at 1.4 million, a trend that will need to be maintained. The company's yearly revenues are shrinking. 128 million for the year ended December 31, 2024, compared to 229 million the prior year as units sold decrease. What you see right away is that with that level of revenue, making a profit is going to be extremely hard. Their general and administrative expenses is by far their biggest expense at over 8 million a year. Because of this, the loss from operations is a whopping 7.9 million. And because the number of weighted shares increased from 15 million to 16 million, the loss per share also increased compared to last year, so that's not a good sign. Their cash flow is currently dependent on equity, which depends on the overall financial performance of the company and the general investing climate. Now let's talk a little about the team in charge. Philip Aldridge is still the CEO and chairman, but we have Jason Maddox as president, Elgin Tracy as COO, and Merrick Alpert as chief communication officer. The board also has Melissa Barcelos, Michael DiPietro, and Terry White-Elk as directors. Finally, a quick nod to the accountants Barton CPA, who are responsible for checking the numbers. To what do we make of all this? On one hand, Envirotech seems to be making moves to position itself for growth, like the Maddox acquisition and the relocation to Houston. However, their financial performance is still concerning, with shrinking revenues, big losses, and a heavy reliance on government incentives that may not last. Their success depends on being able to lower manufacturing costs, ramp up sales, and manage their expenses effectively. The electric vehicle market is definitely growing, but it's also a tough space, and Envirotech faces competition from much bigger players. So, will they succeed? Only time will tell. That is going to be it for me today. What do you think about Envirotech's future? Let me know in the comments, and don't forget to like and subscribe for more deep dives into the world of corporate filings.